present to you all about accounting for government grants in MFRS 120. So here are my list of my team member, which is I'm Muhammad Syafraiman, Muhammad Nazim Amri, Muhammad Salihin, Muhammad Zamir, and Ahmad Syahir. So next. So here is the table of content that we are going to present to you. First, we are going to tell the definition, the next recognition, next the presentation of grant related asset, including the calculation, and grant related to income also got the calculation, and government grants, government assistance, and repayment disclosure. Alright, so the objective of our present is to prescribe the accounting for and disclosure of government grant and other forms of government assistance. Next. Okay, to start the presentation about government grant and assistance, I just want to share with you example of government assistance through few government agencies. Okay, some assistance in terms of cash, either non-repayable funding or loan, while others in terms of other incentive. Here we have an example of Negara Malaysia, SME Corp, that overlooking the development of small and medium enterprise in Malaysia, and MTDC, Malaysian Technology and Development Corporation, that overlooking the development of technology and its industry in Malaysia. So next, these are some of example of assistance by Bank Negara Malaysia for SMEs. We have categories like innovative startups, entrepreneurship, ICT, and e-commerce, export, micro entrepreneur, women and youth. So next, under SME Corp, there are various categories of assistance offered such as capacity building, marketing, finance, financing, branding, and many more, which under each category, there are various subcategories of assistance. Next. MTDC also like SME Corp, there are various types of assistance offered including business funding. Under business funding, there are a few options for tech companies to work together with MTDC to enhance and develop companies through investment by MTDC in the companies. So next, for example, here we have under BAF for business expansion funding. Tech companies are offered funding for purchase of equipment, working capital expenses, overhead costs, cost of technology, intellectual capital, and marketing and promotion. Okay, and of course, other government agencies such as MITI, Pharma, Kementerian Sains dan Teknologi dan Inovasi also offer different kind of assistance for different group of business community. What shown here are the only some of them. Okay, next. So under MFRS 120, accounting for government grant and disclosure of government assistance, we will try to discuss a few relevant questions such as is the grant an income that should be recognized in income statement, or it is a capital that should be recognized in equity. Okay, the first thing that we need to discuss is the definition of terms. Government grants are assistance by government in the form of transfers of resources to an entity in return for parts of future compliance with certain conditions relating to the operating activities of the entity. So these are the definition of government grant. There are a few things to be highlighted here. Next. So the first is government grant is a part of government assistance. And then second is it is must be in terms of transfer of resources, may be cash or asset or other resources. Third, the transfer of resources is due to the entity complying with condition given by government in relation to the entity's operation, which means if the entity did not comply with the condition given, it might be required to repay the resources transferred, or it might not be granted with transfer of resource. and the resource can be transferred either for future consumptions of the entity or for payments of expenses that has already been incurred by the entity, just like a refund or a compensation. And next, government grant in this standard exclude those assistance in form that cannot reasonably have a value upon placed upon them, such as free technical or marketing advice and the provision of guarantees. It also excludes transactions with government which cannot be distinguished from the normal trading transaction of the entity, such as government procurement policy that is responsible for a portion of the entity sales. The existence of the benefit in this case might be unquestioned, but any attempt to segregate the trading activities from the government assistance could be well arbitrary.
Next is about the recognition of government grant. Next slide. Alright. In terms of recognition, similar to general recognition criteria, it can always be recognized if it is probable and can be measured. So, in terms of government grant, entity must comply with conditions attached to them. The grant will not become transferable. Therefore, it depends on compliance and non-compliance of the entity. So, there must be a reasonable assurance that the grant will be received. It is meaning that there must be a reason for you to believe that you will meet the condition to attach the grants. Not that in paragraph 8, it say that receipt grant, meaning the transfer of the resources into our position or into our bank account, cannot be taken as evidence. The condition attached to it will be fulfilled because out of period of time. It is precise that you will not or cannot fulfill the condition attached. The grants can be retrieved and you need to repay them. Similar to forgivable loans, there must be an assurance that you will meet the term of forgiveness to make it probable or, in this case, turn into grants. And once a grant recognized, any related contingent liability or contingent asset is treated in accordance in MFRS 137, provision contingent liability and contingent asset. Alright, next slide. Then, how we should recognize the grant? In paragraph 12, state that the entity should recognize the grant in profit or loss that is in the income statement or the systematic basis over the period, in which the entity recognizes as expenses the related costs for which the grants are intended to compensate. The standard case, the idea that it should be somehow brought into profit or loss or income statement. But how we bring it into the income statement depend on two approach, which is capital approach. The grant recognized outside profit or loss, and income approach. The grants is recognized in profit or loss over one or more period. Literally, that what paragraph 12 required. Right, next slide. However, both both approach are acceptable. The component of capital approved argues that government grant are financing device. Thus, it should be recorded in the statement of financial position rather than be recognized in profit or loss to offset item of expenses that define it. And because no repayment are expected, such grants should be recognized outside profit or loss. They also argue that it is inappropriate to recognize government grants in profit or loss because it is represent an incentive provided by the government. The proponent of income approach, in other hand, argues that because government grants are received from a source other than shareholder, they should not recognize directly in equity but should be recognized in profit or loss. They also argue that government grants are free, that is, without cost. They believe the entity earned them through compliance with the condition and meeting obligation. They should recognize in profit or loss over the period in which entity recognized as expenses. The related costs for which the grants intended to compensate. For grant that become receivable as compensation for expenses or losses already incurred, or for the purpose of giving immediate financial support to the entity with no future related costs shall be recognized in profit or loss of the period in which become receivable. The question will be in which financial year that the grant will be recognized. The year the expenses or loss incurred that is prospectively or should be recognized in financial year when the cash is received. Therefore, we should recognize the grant when the grant becomes receivable. Next slide. A government grant may take a form of transfer of the non-monetary asset such as land or other resources for the use of the entity. In second stage, it is usual to assess the fair value of the non-monetary asset and to account for both grant and asset at a fair value. Alternatively, record both asset and grant at a nominal amount. Okay, next. Salihin.
Okay, I will continue the presentation. Grant can be categorized into two groups, which is government grant related to asset and government grant related to income. Government grant related to assets are grants given to an entity to help purchase, construct or acquire non-current assets. They may come with conditions with which restrict the type or location of the assets or the period during which they are to be acquired or held. The other identified type of government grant is grant that are related to income. This is the type of grant that is generally other than those related to assets. So everything else other than for acquiring assets will be categorized under this category, and basically this type of grants is meant for operational activities, that is to cover certain expenses to the entity. Next slide. Okay, government grant consists of two types, which are related to asset and related to income. Government grant related to assets can be used either income approach or deduct from PPE. For the government grant related to income, can be used either income approach or deduct from the related costs. Next slide. Okay. For the presentation of the grant, it is depends on the type of the grant, whether it is asset related or income related. For government grant related to assets, including non-monetary grant at fair value, they shall be presented in the statements of financial position, either by setting up the grant as deferred income or by deducting the grant in arriving at the carrying amount of the asset. If we set the grant as deferred income, thus creating different grant income account, this is based on income approach, and if we deduct the grant directly from the cost of the assets, this is based on capital approach. Next slide. For government grant, they related to income, they are presented as part of profit or loss, either separately or under a general heading such as other income, meaning heaviest online item, or alternatively, we could deduct it directly from the related expenses plus reducing the amount of the expenses. I will pass to the next presenter.
Okay, my name is Muhammad Izame. I will continue to present the example of calculation for grant related to asset by deferred income method first. Okay, for the situation is CME Corp Malaysia opens a new factory and receive a government grant of 150,000 ringgit for equipment, which costs 1 million ringgit. It is the policy of SME Corp Malaysia to depreciate all equipment over 5 years. Okay, next slide. From the situation, journal entries deferred income method would be debit equipment 1 million, credit cash 850,000, and the balance would be liability deferred income 150,000, which means the grant that company received. So why do we record the liability as a liability is because the grant received by the company is tied to a contract with the government, where it is necessary to complete the contract period, then the liability will be eliminated every year, as what Dr. Mara mentioned before. So the total liability of 150,000 ringgit will be written off annually by 30,000. So the next journal entry will be debit liability 30,000 and credit income. So we recognize 30,000 as an income in year 1. Okay, next slide. This show how the equipment and deferred income present in statement of financial position for year 1. For non-current asset, the amount of equipment is 1 million minus depreciation, and the carrying amount will be 800,000. For the deferred government grant will be in the liability part 30,000. In current liabilities will be 90,000. Okay. So next, this is second method, which is grant related asset by deducting the grant from PPE, or we can call it write off against asset method. So with the same situation, we apply this method. So the journal entries will be debit equipment, credit cash. The amount is 850,000. This is because we minus from the total cost of equipment 1 million, minus by the grant that company received 150,000. So the next journal entry for depreciation would be 170,000, and accumulated depreciation 170,000. We take from the 850,000 minus by 5 years. So we not take from 1 million. Next slide. This is a statement of financial position for non-current asset. We just take 850,000 for equipment and minus accumulated depreciation 170,000 that I calculate before. So the carrying amount will be 680,000. Next slide. This is next example for grant related to income. The situation is SMN Berhad received government grants in 2017. 20,000 to cover maintenance of the machine throughout 2017 to 2026. The company assumed to incur the following maintenance expenses: 2,000 ringgit from 2017 to 2020, which is 4 years, and 3,500 ringgit for 6 years, the next 2021 until 2026. So first step, we need to identify the total maintenance cost for 10 years. So the company received grant 20,000 ringgit. So the company assume the maintenance cost for first 4 years is 2,000 per year. So the total cost will be 8,000 ringgit. For the next year, year 5 until year 10, 3,000 ringgit 500 per year. So the total cost will be 20,000 ringgit. So after we plus 8,021,000, the total maintenance cost for 10 years will be 29,000 ringgit. So the next will be the journal entry, and Najmi Amri will continue this slide.
Okay, hello everyone. My name is Najmi. So I will continue with the example of grant related to income for the journal entries. So we have to calculate the journal entry for year 1. We will debit the cash bank for the 20,000 when we look at here. They receive the government grant for the in 2017 is 2,000 that government grant that government give to the company. So we credit the deferred grant income 20,000, And then for the next journal entry that we need to do is there is basically two types as mentioned by my friend as other income or deducting from the expenses. So for the I will explain first for the other income first. And first one we have to debit back deferred grant income, and then we have to credit other income because now we are using the other income method. The company actually can choose whether they want to use the two ways to present in the financial statement. So basically we have calculated that 20,000 that being given from the government, which is actually the total cost for the expenses is 29,000. So we times for the year one is include into 2017, which is the expenses is 2,000. So we get the amount here is 1379. And then I will continue with year 5. So year 5 is the cost for the year 5 till the year 10 is 3,500. So the amount is 2414. Okay, and then basically if we times 1379 times by 4, we will get the total is 5516. And then for the year 5 till year 10, which is 6 years, so 2414 times by 6, we will get 14,484, 40,484 ringgit. So the total is 20k if we sum up for the year 1 till year 10 because of if we the question the company assumed to incur the following maintenance expenses 2,000 for the year 1 till year 4 and 3,500 for the year 5 till year 10. So after that, the second ways to present in the financial statement by deducting from maintenance expenses because they the company can choose that be deducting from maintenance expenses. That meaning is these expenses actually the to cover the maintenance of the machine, right? So it's like it has been subsidized by the company. So we have to debit the deferred grant income, and then we will credit directly to the maintenance expenses. So it will not acceptable as income for the company. And it is same for the journal entries for the year 5 till year 10. So if we calculate from the 2000 year 1 2000 the actual incurred cost 2000, and then we minus by 1379, so we will get 621 ringgit. So 621 ringgit will time by 4, so we will get 2484. And then for the year 5 2414 we will minus by 3500, so we will times by 6 years, so the total in cost is 9,000. It mean the excess of the cost from the grant that received only 2,000. Okay. Okay, and then I will continue about the revocable or repairable grants. This mean a government grant that has been revoked, cancelled, or becomes repayable should be treated as a revision of accounting estimate. Basically, if there is a contract between the company with the government. So there is a term that will apply by the in the contract. So if there is any mistake or that that can make the grants revoked, so the treatment depends on how the repayment is made. So if repayment of grant is related to asset,
it should be recorded by increasing the carrying amount of the asset or reducing the deferred income balance by the amount repayable. And then if repayment of grant is related to income, it should be applied first against any unamortized deferred income, or any excess from the expenses should be recognized immediately as an expenses. So the next is government assistance. Government assistance is uh, same like the government grant, but it's not about there is no contract or something like we still receive the fund from the government. The definition of government assistance is action by government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. It seems like we can see during the pandemic COVID-19, there is many economic benefit for the companies or citizen in the actually is for the companies in the Malaysia. So it is does not include benefit provided only indirectly through action affecting general trading conditions, such as the provision of infrastructure in development areas or the imposition of trading constraint on competitors. For example, of such assistance whose value cannot be reasonably measured are technical or marketing advice and provision of guarantees. So, and last one is for the disclosure. So basically for the disclosure of governance grants, accounting policy adopt for governance grants, including the methods of presentation adopted in financial statement, which is already been explained by my friend, which is there is a two method uh, two method and two ways to present in the financial statement, which is by capital approach or income approach. So the second one, nature and extent of government grants recognized in the financial statement and other form of government assistance received. And lastly is the unfulfilled conditions and other contingencies attached to government assistance that has been recognized. So that's all from our group. So thank you.